Hi, everyone. Thanks for joining me today. What I really wanted to focus on today was looking at the intraday action that played out in the S&P 500 this week, specifically looking at how can we use futures E-mini contracts to make massive profits, and also why it doesn't matter whether you're long bias or short bias in the market, there's always trading opportunities each and every day. So I really want to focus on how can you maximize that potential, and it really comes down to having a strong plan that you follow each and every day. So I'm going to start off first by looking at what was the market view before we entered Monday. So I have each one of these 5 minute time frames representing a certain day, and I've mapped out each um, opportunity. So let's look at the weekly chart first. It's always important to start with the higher time frames because that gives you an idea of where the momentum is coming into this week. So this week closed with a hammer candle, but the previous week was also a hammer candle as well. So what you need to take away from this week coming into Monday was that we have a potential to continue higher. Hammer candles are one of the strongest candles showing continuation, but obviously we see this week that we didn't have much follow through. We just had a week of kind of silence or consolidation because we were trapped in the range. But anyways, going into Monday, definitely you had somewhat of a bias looking too long, just because of that hammer candle. So I've mapped out all the best trading opportunities each and every day and looked at what those net P&L look like. And I really want to go through in detail with you guys how to execute them, what the setups are, and how you can maximize that. So coming into Monday, so the most important things that you need to have on your chart, guys, are the low of the previous day. So this would have been Friday, the high, as well as the close. So I'm gonna adjust these levels right now so we have some guidance here. So coming into Monday, we're looking at these levels, looking at the importance of them and building trading plans around them. So what was the best opportunity for longs? What was the best opportunities for shorts? That's what I'm gonna go through this day. So it's important to really have your levels drawn before the market opens. So on Monday, we have we have a gap down, and this gap down ends up being right at Friday's low. So as a bull trader, your mouth should be watering at that point. You're looking for opportunities to go long, and given that this setup is at a previous support, you're just looking for an entry reason at that point. So one of the entry reasons that I like and I preach and I tested is these hammer setups. So I set up this trade very quickly here for you guys, where you would just enter above the high, stop loss below the low of the day, and how that would play out. And definitely depending on your system, if you're trailing, if you're going 1-to-1, 2-to-1, 3-to-1, you could have made some money on this setup. So entry here, stop here, long 1-to-1. Okay. And as a short trader, what would you be thinking at this point? Well, as a short trader, while this market is running up, you're getting excited because you're looking for the next level where we can potentially have a area of resistance and start to drop. And one of the setups that I'm going to go through here is called the gap fill. So if we notice when we approach this wick, this last 5 minute candle on Friday, we get some resistance. And this is a setup that I would take hands down each and every day. But obviously, it's something that you need to test and make sure you're comfortable with before doing it. But how it would be played out is we would enter at the low of this candle, right here, when we get this little confirmation right here, that's a confirmation with a stop above the high. And this is something that you get in and you ride down all the way to the close. And you could have easily made 3.5 times your risk. And everything that I talk about here, guys, is based on risk units. If you don't know what that is, I can do a separate video on that. Yes, I'm using TradingView and everything's free right now, so that's why I'm getting all these ads. But anyways, let's go on to Tuesday. So Tuesday, what's a setup? So we have a gap down. Gap down in itself is weakness. That's what it means. It's weakness. So you should be thinking right off the bat, short. So the short entry itself is a Fibonacci retracement that we have here. So we have a low to high, a retracement right here, if you guys can see, at the 50% retracement, and this is something you ride down all day. And trailing it, covering it, taking targets, that's all depending on your system, and that's something I could go through in a separate video. But you could have easily made 4 times your money here. So the very bottom is 4.6, but I'm being conservative and saying let's get 4. And then the long setup, you have to be patient because of the gap down, because of what happened on Monday. You have to be patient, and patient pays. And we can see it right here. Here's your double bottom setup that comes in beautifully. Enter above this engulfing candle and stop right below the low. And you can easily ride this back up, trail it, whatever method you have. And at the very highs, there was a 3.5 risk to reward. And that all depends on your system. But something I want to point out here, which is very critical, is what a lot of new traders don't know is the E-mini, the S&P, there's a futures market. Here's the futures chart. This market is always open, okay? And this right here is what played out on this chart on Tuesday. And what this is showing here is something very important. So this was the Tuesday action. Here was the overnight. But what I want to point out with you guys is this level right here. Okay, let's look at the low of this candle. The low on Tuesday, it was 27.1738. And then the low overnight, which was at, what is this, 8 o'clock? Yeah, 8 o'clock. The low was 27.1838. So 1738 versus 1838. And it's a beautiful hammer candle. What this means right here, when this shows up, this is a beautiful double bottom that's saying at this level, the bulls are stepping in and they believe that this is where they want the week's low to be. And that's what the week's low ends up being, right over here. Here's your low. So when you see that type of setup coming in, and if you were long over here, this is something that you can swing for the rest of the week into Friday, or even into next week, depending on what your system is. So once that came in, you notice for the rest of the week, we go up. So those are things why I advise people, look at the futures market, have all the tools at your disposal, and then make your decision based on that. So now coming into Wednesday, as that pivot was established, we have this gap up. And with this gap up, I'm presenting both opportunities, a long and a short. And if you notice on this one, the short is actually a loser. But with this type of gap up and this pivot that came in, you should have really been thinking long only for the rest of the week, because it shows that this might be the week's low. There's a lot of buying here, and why would you try to go against that? You know, take the easier way, follow the big money. This is the big money showing here that this is where they want the market to bottom. So going into Wednesday, what are your setups? So let's start with the long. So for the long, I have these candles here that are dark green. And this is just a free indicator on TradingView called tweezer bottoms and tweezer tops. So this candle right here has the exact same low as this candle right here. This candle has the exact same low as this candle. And what it's trying to show is that when this next candle opens, it can't break the previous low. There's a lot of buying power. So when you start seeing these tweezers forming, that's a good indication of strength. So the long setup, you would literally get in above this tweezer with a stop loss below the low, and you could have rode it at least for 2 to 1. And I'm being conservative and just saying that you got this little close action. And by the way, guys, all these setups, you are out at the end of the day. You have no commitment. You're not taking it to the next day. We don't want any risk overnight. We just want to come in, make our money, get out. That's it. For the shorts, you would have definitely had a loser today. And I don't know why you would want to be shorting, but I'm just going to demonstrate here. It doesn't really matter if you're long or short. At the end of the week, you're still going to make money. So with the short, you would have, the only really opportunity that I saw here was this double top or this opening range breakout on this 5-minute candle. You would have went short with a stop loss above the high, and eventually we're going to put that down as -1. Moving on to Thursday, at this point, you should have really realized that the bulls are in full control. So you want to get a long opportunity right off the open, right? So right off the open, we have this big power candle. We have this retest right over here, and then we have an extension. So from a long perspective, what you would have done on this setup, let me just move over this chart here. You would have definitely gotten on this Fibonacci pullback here. This is a pullback, entry above, stop above. You could have easily got one. And then if you were short, you would have to wait this whole movement out and then understand that with this movement here, you are going to be playing counter trend, but that's okay. We're going to wait for the appropriate setup for the short. And the only setup that there was for the short was this Fibonacci retracement. Low to high is right here. Here's your 50% retracement right here at your 618, right in the zone. And then you would have taken this retest short with a stop above the high. And then this one, you would have made some massive money. So you would have at least gotten 3 to 1 and then have it drawn off at the very low, it was 3 to 1. But again, it depends on your plan. I'm showing you guys the options. I'm showing you guys whether you're long or short, you can make money. And that's all we're trying to do each and every week. We're trying to come to the market, make some profits, and leave. No strings attached, no investing, no holding overnight, no waking up at 3 a.m. thinking about what's going to happen. We take our profits and leave. And then Friday is a very, very interesting setup that came on. This is one that was one of the biggest winners that I've seen in a very long time. And specifically for long and short, it was a great day. So I'm just going to move up some of these lines to give you guys some reference here. So this ended up being Thursday's low. Surprise, Friday's low access support. As usual, these things aren't magic, guys. It happens each and every week. You have to put in the work to see this, and I see this each and every week. So let's look at Friday. So Friday, we have a little bit of a gap up, and the short opportunity comes right off the open. You have this topping candle here, a lot of selling pressure, enter below the low, stop above the high, you take it to the gap fill right over here, and you have to be in and out. And at this point, when we're coming into support, you have to be cautious. So you could have made your 1.5 to 1, but that's pretty much it for the shorts. And then we see a very beautiful setup here for the longs. Again, another double bottom, one of the strongest, most powerful setups right at the previous low of yesterday. And this is something very similar to what I was showing you guys on Monday. Those are my favorite setups. Those are the ones that you can, take and feel confident about. So we would enter right above the high, stop loss below the low of this candle. This one was a 6R winner if we had just trailed conservatively and got taken out at the end of the day. And that's it, guys. And then we sum it all up. Whether you're long or short based on these opportunities over here, you're still making money at the end of the day. So 11.5R long, 10.5R short. So an R basically represents 1% of your account. That's what you're willing to risk. We have solid fundamentals. We don't risk, stuff that we're not willing to lose. So if, let's say we had a $10,000 account, risking $100 each trade. So that's easily $10,500 short and 11,000. Sorry, I gotta correct myself there. So that's gonna be $1,050 long. We wish it was 10,000, and $1,150 long versus short. So there you have it, guys. Very simple, very easy. Each and every day we come to the market, we have a game plan. There's opportunities for both sides, and if you're not making money, what that means is that you don't have a plan, and it's that simple. You don't have a plan, you don't have risk management, you don't have targets, and I want to demonstrate to you guys that it's simple. Have a plan, study the markets, and try to conquer it. And it really is a battle each and every day between the bears and the bulls, and you need to ensure that you come prepared, you come with your ammunition to fight the war. And at the end of the week, not each and every day, but at the end of the week, you're positive and you're on the road to victory. All right, guys, thanks for listening. And, comment below, let me know if there's anything you didn't understand, if I went too fast. Sometimes as traders, certain things in our brains click because we've seen it before. And for new people, definitely, I can go in more detail if there's anything specific. Again, thanks for your time, everyone, and enjoy your Sunday. Take care.